everybody. It's Ryan Carson here with Carson Law. Really happy to be with you guys today. And I'm joined today with Mark Baltazar. He's with Peak Multifamily Investments. And he's been a client and a colleague for quite some time. And he's heavily involved with real estate investing. And we'd like to share some points and some topics and answer some questions, hopefully, for you guys that deal with specifically multifamily, multi-res, commercial real estate investing and developments. But I'll let Mark talk a little bit about himself and Pete first, and then we'll dive into some of these questions and see where this conversation takes us.
Sure. Yeah. Thanks, Ryan. Excited to be, part of the conversation. So I've been investing for about 6 years now. I started off with flips. Actually, my intent was to start wholesaling. I took an evening course that led to a weekend course and almost bought a $40,000 US program out of it, which taught wholesale. Actually, I taught a few different strategies. But my early on, it was focused a lot on flips because it was kind of generating cash, and wasn't really interested in buy and hold, but quickly realized actually that it was an important part of the portfolio. So then started holding properties, some duplexes, a few duplexes. The largest property I had was a fourplex early on. And so my background is a business background, helped grow a small marketing firm out of Toronto from 3 to 30 people over a number of years. And so process and business growth and processes was always been of interest to me. And I think as I looked into different investment strategies, a little bit more commercial real estate anyways, commercial real estate was kind of more, I guess, similar to what I was used to from a business standpoint, kind of growing the bottom line, net operating income, valuations, et cetera. And so I shifted my attention maybe 3.5 to 4 years ago to commercial residential. And in a couple of years, after I started a brand, Peak Multifamily, kind of big, about branding. That was my background, and so the importance of brand and developing brand, et cetera. So yeah, it was more of it was really about how do I scale and how do I operate kind of a business, and commercial residential was kind of that, checked all the boxes for me with that regard.
Nice. Awesome. And is there anything the viewer should know specifically about Peak? And I know that you mentioned earlier when we were talking offline that you have Peak Property as sort of a parent group, but then specifically you've created this Peak Multifamily, and that's really what you're working on driving and growing right now with the multifamily and the commercial development. Is there anything you want them to know specifically about Peak Multi?
Sure. Yeah. I mean, so it's interesting early on. So about 5 or 6 years ago when I started, so my background is branding, brand strategy. So I worked with a lot of big Canadian brands and global brands on, interpreting research and insights to help them craft brands. So I've always been a proponent of proper brand strategy. And so a big decision for me in the beginning was, do I brand the company at Mark Baltazar Investments, or do I create a brand? And so I decided to kind of start creating a brand, which was Peak Property Investments, with the idea someday maybe it could be sold, or perhaps it could live and breathe and grow without me at some point, which is kind of, with the end goal. And so that's why I kind of wanted to separate myself from the brand itself. And then a number of years ago, so Peak Property Investments is really where I raised capital for flip properties and some JVs in the smaller buy and holds. Then when I shifted the focus to multifamily, I wanted to be a little bit more, at least have the brand a little more specific to multifamily and be known as, a leader in the multifamily or the commercial residential space. And so then created the Peak Multifamily Investment brand, which is so maybe a little more, when people see the name, they understand that it's about multifamily. At least that's kind of what we're trying to do with the brand right now. And so essentially what we do with Peak Multifamily is, one, we partner with people that are looking to, include or, enhance their portfolio with a little more stability, which I think multifamily commercial is really the big benefit of it, is stability over a long term.
Right. Yep.
We've also started, coaching people. So people that are getting into commercial residential, peers, we have a system. We're helping people acquire, and so we're kind of teaching people how to do that. And so it's all kind of housed within, the Peak Multifamily brand. So kind of all things apartment buildings really is what it's all about.
So that's where Peak Multifamily is going. Perfect.
Correct. Yeah.
Yeah, it makes lots of sense. And so are both Peak Property and Peak Multifamily, are they separate incorporations, or are they like more just a brand name all under one corporate structure, or two separates?
It's two separates. So right now, Peak Peak Property has, its own brand, its own holding company. It holds also other assets within it. And then Peak Multifamily, while we've been operating, my partner and I have been operating apartment buildings for a few years, we've kind of created this new brand and are now about to actually figure out what the right legal structure is. The brand structure is created now. So we're actually in the middle of trying to figure that out, as what is the right, with all the things that we're doing, what's the proper legal structure to protect us and also just ensure that we can continue to grow.
Right. Yeah, no. And so, that probably the reason I kind of asked that question, and you're alluding to it there, and even your points earlier about making sure, early on in the process, maybe even right at the beginning, you really identify or try to identify as best you can that your brand plan. How do you want to brand yourself, brand the business? So that, I think that's great to see that, you started that early, and probably it was a bit easier for you because that was your specialty in your previous life, branding and that kind of planning for the business. But that's probably not something too many people give a tremendous amount of focus on. They just kind of think I want to put my focus on going and getting properties, which makes total sense.
Yeah.
But they don't really put a lot of that time and effort, I think, into the planning aspect right at the beginning. Like, how do I want to be branded? How do I want to be perceived out there with other investors and potential buyers and sellers, professionals in the community, in the industry? And then the other thing is, if you put that time and that effort into the planning aspect right at the front, I'm thinking legal planning, brand planning. Throw that in with business planning, but then also like the tax planning, that can really save you a lot down the road too. I know us being both entrepreneurs and, business owners and that sort of thing, it's, we can say this because we went through it, we've lived it. When you start up, it's tough, you're trying to balance costs and everything like that. But for people, who really want to push it and drive forward with it, you quickly realize if you do spend a little bit more in investment at the beginning with some of those structure fees and everything like that with accountants and corporate and legal, I do think it pays you 10 times
yes,
down the road, and potentially depending how fast you're moving, it can pay back quite quickly.
Yeah, and I think what you just said, just the word investment, because some people, I think that's a mindset shift.
Yeah.
Is you said investment. I believe, legal, as well as accounting and other professionals and brand, the amount you spend in your brand, building your brand, those are all investments.
Yeah.
I think some people think of it as fees and costs. I think that's a mindset shift because yes, you're paying for it now, but the ROI, I think we've seen it, and you've seen, obviously, being in business, there's a return on investment for that upfront cost, right? It's either in the form of the money you're going to save later, right? Yes. Trying to fix issues that could have been prevented, or it's actually going to, it's going to generate, more profit. Either way, there's an ROI. And so because of that, it's absolutely needs to be looked at as an investment. And so, yeah.
Yeah, no, that's great. I'm glad we kind of informally started with that bit of conversation because it wasn't really part of the script, but I think it flows nicely and it helps people depending on if they've already been doing this for a long time, or they're just trying to do their first one or two deals, or they're kind of in that growth mode or struggle mode where it's sort of like, I've been able to do this, but I don't feel like, the ROI is there, or that I'm growing at the rate I want to, or whatever. It's those sorts of investments, as you said, working with somebody like yourself at Peak who, does coaching, does mentoring for investors, helps them strategize and create that kind of structure on the business and the brand side. And then,
Mm-hmm.
our office and different accountants that you and I both work with, they're everybody's a real estate investor themselves or has been. And we're all small self-employed business owners too.
Yeah.
So we can kind of share everybody's pains and gains personally from that perspective. And
Mm-hmm.
we can take the hats on and off and kind of say, hey, look, we get it. We know what it's like, but trust me, take some time, find a way to make the investments early and often up front. And hopefully, if we're doing our jobs, all of us, it should reap benefits for them, very quickly, right?
Yeah, absolutely.
Yeah. One of the questions that you and I kind of talked about that we might want to mention to the viewers was, Peak's real estate investing principles, which one should a first-time investor pay close attention to the most?
Mm-hmm. Yeah, good question. So maybe I'll describe the principle.
Yeah.
Principles that we have. This informs, and we call it principles because it informs how we where we invest, where we put our money, and which buildings we acquire and buy. It's very simple. Three things. One, we're looking at markets or properties that are in markets with strong fundamentals. So fundamentals such as have strong GDP or good population growth, good employment, good transit system, high. Those things typically lead to high rental demand, and there's typically lower supply because of demand. So that's to us is like very strong fundamentals. That's, if you're in a market with strong fundamentals versus weak fundamentals, your property has a higher probability of performing if it's in strong fundamentals. So that's kind of one principle, I guess. The other thing that we do is purchase properties that are I wouldn't say undervalued, because depending on the market, you could be overpaying, but that's okay, is undermanaged. So assets with strong upside, right? So we don't buy turnkey assets. They all have strong upside. And the third principle, and this I think works for people starting off as well, and it's one that we absolutely look for because we made mistakes in the beginning. It's partner with like-minded people. And that means, if we're going to partner with somebody, because we partner with, people that have capital, understand that multi-residential is a good fit for their portfolio, but just don't have the time or the experience to kind of manage. So we do that. So you're entering into a marriage, right? And so you want to be on the same page, in terms of values and principles. And so those are those are three principles. I would say for someone starting off, if you're doing it on your own and let's say not raising capital, I think in a market with strong fundamentals, I think is really important, because the more positive economic influencers there are in a market, the more secure your investment is. And I caution, and we have these conversations with people that we work with all the time, because one of the big questions that we always get is, or comments is, well, I want to go to a high cash flow market. And cash flow is important, right? Don't get me wrong. High cash flow markets, though, the reason why they're high cash flow markets or high cap rate markets is because there's a lot of volatility in those markets. And so, and typically have weaker economic fundamentals than markets that have, lower cash flow, let's say. So I would say, pick a market that has strong fundamentals, because it will be protected in up and down markets. Whereas if you are in a market that doesn't have to check all the boxes from an economic fundamental standpoint, like now, you may be experiencing some, some tough economic times. And so I would say if you're in a good market, then you'll be able to weather the storm a little bit and maybe mitigate some of the mistakes that you've made, that you might make kind of on the purchase, for example. So I would say that's probably, as a first-time investor, I would say that just be in a good market. And if you're in it for the long term, you are going to overpay now maybe, but if you're in it for 5 to 10 years, it's all, you're going to be winning.
You're going to be winning. Yeah, I know. And that makes a lot of sense to me. I think, especially if you're looking at multi-resident commercial properties, the deals are obviously a little bit more involved. They typically could be a bit more expensive than people buying, the smaller single family or just like duplex type properties.
Yeah.
You're probably taking more time and investing more of everything, more resources, more financial, more just your time as a whole into a multi-family or commercial deal. And so, you're probably planning to hold it for at least, a five plus, period of time, because you want to probably do some things with the property and then give it some time to give you the ROI that you're hoping it will have, right?
Mm-hmm.
Yeah, no, that's great. And I mean, you don't have to look too far to see how stuff happens, right? Murphy's Law. And, everything that everybody's seeing right now with COVID, and not too long ago, it was the crash in 2008.
Yeah.
I think there was one in between there as well. And so there's just, there's lots of stuff that always kind of seems to come around every couple of years. And so I think that's a great point. If you can find a way to maybe, offset paying a bit more or having a bit more invested in a deal, but know that it's a very controlled and stabilized area, that you're going to, in the long term, reap the benefits. So that's great.
Yeah. Yeah. Like, for example, like my partner and I just, this morning, we're going through kind of our weekly status and going through all the deals that have come across our desk. And there's some deals that are in like really, high cash flow markets today, high cap rate markets. And we're still reluctant to go into those because when times are good, they're really great. But and we've seen historically when times aren't so good in those markets, it's really tough, right? Vacancies are very high. So, as long as you're prepared for the volatility, then, go for it. Right. Yeah. But I think as a first time investor, that volatility, makes it tough to sleep at night, I think.
Yeah. Well, yeah, no, for sure. I guess it all goes down to your risk tolerance a little bit too. But no, that would be me for sure. I would feel much more comfortable about a longer term play in a more conservative and balanced area than, all in on a property that, for 2 years could sink me type of thing for sure.
Yeah. Yeah.
So I think we kind of talked about this next point that we sort of had scripted, but we were thinking about, is there a specific type of commercial property that you specialize in? I mean, I think you've kind of hit that, with Peak Multifamily Investments. It's about the larger multiplexes and/or that you're getting into actual apartment complexes and the commercial. But I don't know if you want to, say a little bit more about that, or maybe to tie in your previous point about picking a more balanced and fundamentally sound area to invest in as opposed to a high cash flowing area. Maybe let us know, is there an ideal, if there was a dream property, if it could come across your desk today, what would that look like? And maybe suggest a city or two that kind of is showing those, it's a good balanced market area.
Sure. Yeah, the ideal property, we actually have a few in our pipeline right now. So kind of 20 units, 18 to 20 unit target. So our portfolio right now spans from 12 to 14 units. And now, so anything, so we'll look at anything that's kind of 12 to 25-ish or so. So the ideal right now is a 20 unit in Hamilton, St. Catharines, along that corridor is kind of that, if anything pops up within that, within those kind of criteria, then we'll jump on it. It's also very competitive. So we have also recently lost out on bids on buildings with that criteria. So we're not the only ones out there that are looking for it.
Yeah.
There are bidding wars right now. And in fact, we're just closing on one in Barrie. And to get to that one, we lost out on 3 others, right? And it's interesting because, you then find out who else is up against you, and all people that we know, right? They're all it's all such a small group, right? So like 18 to 20, Hamilton, St. Catharines, Welland, I've looked in Welland. I've, analyzed stuff in Welland to certain neighborhoods that would be of interest. So that's kind of our target right now, where rents are, and again, in any of those markets, rents have to be, 40 to 50% below market.
Perfect, perfect. Another question for you. How has investing in multi-residential changed since COVID started? Anything specific that you probably want the viewers to know about COVID specifically?
How has it changed? Okay, so I think in March, I was, and a number of people, the other investors were worried about what rents, um, you know, the default rates were going to be on rent payments. I think I think most people, we have definitely been quite surprised at the you know, how much rent we're actually continue to collect, right? So there's been very little. Yeah, it's been pretty amazing, and I think the stimulus packages that the feds have implemented are helping as well. So we'll see as that starts to roll back what happens. Um, from a demand standpoint, it's interesting. So again, part of our model is we partner with people that have capital that we partner with in our projects, and we run the project. We were able to attract partners in probably the fastest we've ever been able to attract partners during COVID, actually, which at first was a surprise, but then you understand the psychology behind it. Part of it is, again, with the stock markets kind of going up and down, up right now as of today, or continue to go up, at least on an upward trajectory. The volatility that COVID had caused early on, again, just reminded people that, yeah, when times are good, times are good, but when they're not, they're not. I need to put my money into something that's stable, and boring, but is going to grow at the same pace over a number of years. And so commercial real estate is part of it, but specifically multi-residential is kind of this, it's always been known, actually, even before COVID, always been known as a recession-proof asset class. And I think people were reminded of that during this time. And so capital partners really kind of came out of the woodworks to jump on some of our projects, during literally March, April. So,
Yeah.
so I think it's actually putting a spotlight on it, which is good. On one aspect, it is making it more competitive, and I foresee it to be more competitive as more people try to get into that space and try to buy up the inventory, because they're not building them anymore so much. I mean, I think the government is putting together incentives that are helping incentivize builders to build purpose-built rental units, because we do have a shortage of housing, but that's going to take a bunch of time to impact the supply side of things. So yeah, COVID, my perspective, at least my experience, has positively impacted that space a little bit, at least from a capital raising standpoint.
Interesting. Yeah, I know. And you know what? We've got some other clients that are in similar but different businesses where it's, I'll call it alternative investing. And they've actually, I mean, they've tried their best early on when everybody was obviously really shocked by COVID. And I think, the effects of it were a little bit more personable. People were losing jobs, people were getting sick, ultimately people were losing their lives too. And so it was a pretty serious thing early on. Still is serious, but I mean, I think people are now settled, as people are saturated with what the new norm is, right? A little bit more than they were 3 or 4 months ago. But he has just, I think, started to promote how successful his business has actually been from an investment strategy through all of this, making it rain for him, in the sense that, people are like, oh, I put my money, in the usual, channels, because it's the thing to do, TFSAs, RSPs, et cetera, and they all just, sank like a rock. And if I had maybe taken that money and put it into a couple of these different ventures, these guys are getting rates of return, at, 8, 10, 15, plus percentage points. And I'm not even breaking even. I'm losing, right? Heavily. So it was a nice story,
Yes.
for him to be able to spin. And then to your point, via COVID, you're kind of actually driving a bit more business your way because everybody's always hungry for a solid, investment opportunity. So that's
Yeah,
great.
absolutely.
I'm glad to hear
Yeah.
that for you guys for sure.
Yeah.
Maybe one last question to end with
Hmm.
before maybe you give your like a favorite tip or quote or
Hmm.
so forth to end with. But we'll ask one more question here as time permits. With the trend of businesses realizing that working remotely may be here to stay, how do you think that's going to affect demand in the multi-res slash like commercial, big box kind of real
Hmm.
estate area? Do you see or have any insights or inklings on what you think that might do to the real estate market? This work from home remote thing. I know it's something that
Hmm.
I'm finding kind of interesting to speculate on. Working with landlords quite often a lot, and they're some of them are small to medium sized landowners, and they've got corporate and business tenants, and it's just kind of like, well, are people going to just try to get out of their leases or just not
Yeah.
renew or renew at significantly smaller spaces? I mean, it's interesting the point you just made because you're more or less indicating it's actually helped you guys get more investors and see
Yeah.
more demand and drive. But then I guess my question is almost going to the opposite point is, do you think, medium or long term, there could be maybe not a drop in this kind of investment arena, like the multi-res commercial, but would there be maybe a shift because people are kind of like, well, I don't need as much space, right? Like, what do I need
Hmm.
this big business space for when I've got half my staff or more working from home now?
Yeah. So a few perspectives on that. So in my previous company, so we used to work with, again, some big, really big kind of global brands, some household names, which I won't mention, but like household name brands. And I'd work with the senior executives, out of Toronto. And 3 years ago, 4 years ago, they cut their office space by 75%. And we're already starting kind of the work from home operation. And so, and these brands are very forward thinking globally. They've, very successful household brands. So that's already kind of started. And so I think this is now just going to expedite it a little bit more for those companies that were kind of thinking about it, are now absolutely going to move that way. So reduce their floor space, have people work from home a little bit more, not everybody, or not all the time. And so I think that's going to, that's going to happen a little bit more.
Mm.
And I think what people are probably realizing too now from working from home is that yes, there's pros and cons. There's a lot of downsides to it as well, right? So I think stimulation of creativity and interaction with people that people are definitely missing out on that, and that's important, especially for a lot of businesses, to spur imagination, creativity, and just productivity. So I think some mixture of that will happen. From the real estate investment side, my perspective is, and I know looking at kind of the big institutions, some institutions share this, some perspective, some don't. But I think so if you look at commercial real estate, you have office, retail, industrial, and then residential. I think there will be a shift in investment dollars away from office and retail. Kind of my prediction. And again, I don't spend a lot of time in those spaces, so I don't really understand completely the fundamentals that drive the office and real estate retail space. But just from the surface level, if fewer people are working in these office spaces, then less space will be needed. And so I think some of those investors will start to shift over to residential, commercial residential, and kind of with the stability. So I think it's actually, there's a lot of upside for the residential side of the business. At least from a capital standpoint. I think the downside of it is because there'll be higher demand. I think cap rates will start to compress. So demand will start pushing up pricing for these assets. So I think from an economic standpoint, I think we'll see money come in, but also it's going to push the values up a little bit more as people start to shift away. from a rental demand standpoint, I think so. The markets that I'm in, so kind of Barrie, I've probably St. Catharines, Hamilton. If people can work from home, then they're probably a little bit more willing to move outside of Toronto a little bit more, and so the need for housing will grow outside of the core, where kind of some of the big offices are, and because they'll only have to come in once a week, twice a week, etc. So I think they'll start. So I think rental demand will start to grow kind of outside of the center a little bit more.
Yeah, interesting. I mean, the one thing too that I don't know. I guess I'm speculating on it. Is I think you might see some of that retail office space start to maybe go through conversions.
Yes.
Maybe you'll see more approvals from the municipal levels to, with the trend that you've just kind of suggested, with people trying to escape maybe being right in the epicenter of a downtown core city, go to the suburbs or the semi-suburbs a little bit more, and then all of a sudden, there's a demand for residential space, which isn't really there because you've got this retail and office space, but it's sitting vacant. It'll be interesting to see maybe if municipalities start to use several more approvals of conversion. That's just something I'm interested to see. I just think of the big malls, right? Like, you're in Burlington. I mean, Mapleview Mall and the Burlington Center now, as they call it. I mean, that's a huge footprint of real estate land, and it's just kind of like, I don't know, like, I see it. I see the people who own that needing to probably redesign, re-envision what that looks like. You could still have retail there, but probably on a smaller scale, and but intertwine it with multi-res, maybe commercial or something, right? So it'll be very interesting to, I think, see where it all goes. But that's the fun of this, right? So
and then I mean, because the supply side is still suffering, there's low supply of housing units, and that'd be an easy way, but a way to increase that supply.
No, it'll be interesting to see. Well, it'll be interesting to see if time proves us to be right. We'll see. Maybe just because we got a couple minutes left, maybe Mark, just give us a favorite quote or tip or anything you'd like to leave the viewers with for today.
So I think, I guess specifically maybe for people that are looking to get into multifamily residential. So I think it's a quote that I always kind of think about for myself, whether it's this business or even my previous business, and just any business, especially as an entrepreneur. There are ups and downs. It is a struggle at the beginning and sometimes throughout. But what I remind myself of is that if it was easy, everyone would do it. And I think that's, it's not all kind of sunshine and roses. You got to go through whatever tough times it is, maybe it's, lots of stress or overworked or whatever, but, and it kind of, staying persistent and consistent will kind of get you through that. Especially, I think if you're thinking about going into the apartment building space, patience is really important. And something really important to remember, especially if you're coming over from single family where things happen maybe a lot quicker. You might be able to see, 10 deals a month, 10 deals a week, in single family. In multifamily, it's a little bit slower. Numbers are bigger. And so it needs kind of some patience, some persistence, but yeah, I mean, I'm of the belief in all the stuff that we're putting out there, podcasts and webinars and stuff, is really because we believe anyone can do it, right? Regardless of your, past or financial situation, anyone can do it. Just surround yourself with the right people and kind of get kind of proper mentorship and kind of educate yourself. And anyone can kind of get into this space. And I think it's a very, I think, rewarding and fruitful kind of asset class to be a part of.
Perfect. Yeah, no, that's great. Thanks very much, Mark. Thanks for taking time on a busy day, month end, June 30th. That's always, it's a huge day for us. We got lots of closings happening. So I'm sure you're quite busy as well. And enjoy the rest of your week and your weekend. And hopefully you and your colleagues and your family stay safe out there. Thanks a lot.
Thank you. Thanks for the opportunity.
You're welcome.